All right, let's dive right in. Investing, especially right now with the market doing all sorts of crazy things, can feel like you're caught in a total whirlwind, right? But don't you worry. We're here to give you a map, a compass, basically everything you need to find your way. So let's get into it.
This quote really nails it. The stock market is a bit of a puzzle. But, and this is the important part, it's a puzzle that's absolutely worth solving. Because even when it seems confusing, there's always an opportunity to build wealth no matter which way the market seems to be heading.
So that's the big question, isn't it? How in the world do you navigate this vortex? Well, that's exactly what we're going to tackle today. We're going to break it all down piece by piece, starting with the absolute basics. All right, first things first. Every journey has to have a starting point, right? And before you even think about investing a single dollar, you've got to understand the language of the market. So let's get our bearings. So what even is a stock? It sounds complicated, but it's actually pretty simple. When you buy a stock, you're literally buying a tiny little piece of a company. That's it. You become a part owner and you get a claim on its future success.
Okay, let's talk about the big one, risk. This is super important. Whenever you invest, there's always a chance you could lose money. It's just part of the game. And you know what? Understanding and respecting that fact is probably the most crucial first step to becoming a really savvy investor. And going hand in hand with risk is this idea of volatility. You hear that word a lot. It's basically when a stock's price just swings wildly all over the place. Think of it like hitting turbulence on an airplane. Yeah, it can be pretty unnerving, but it's a totally normal part of the investing journey. So, just to let you know, stocks generally come in two main flavors, common and preferred. With common stock, you usually get voting rights in the company. Pretty cool, right? Preferred stock, on the other hand, doesn't get you a vote, but you get first dibs on payments called dividends. For our purposes today, we're mostly going to be talking about common stock. Okay, so we know what a stock is now, but how do you figure out if it's actually a good one to buy? Well, it all comes down to a really key concept, understanding the huge difference between price and value. And to make this crystal clear, we're going to use a super simple analogy. Just imagine for a second that the stock market is a giant grocery store, and all the companies are just cartons of eggs. All right, you're standing in the aisle. You see two totally identical cartons of eggs. Same brand, same size, but one costs $1 less than the other. Which one are you going to buy? The cheaper one, right? I mean, of course. You're getting the exact same thing for less money. That's price. But now, what if the price is exactly the same, but one carton has these beautiful, fresh, high-quality eggs, and the other one is, well, kind of stale? You'd obviously pay for the better quality eggs, and that's value. True value in investing is finding that perfect combination of a good price and a high-quality company. Okay, another really key way to evaluate a company is simply by its size. I mean, not all companies are created equal, and how big they are can tell you a whole lot about their potential for both risk and reward.
So, the way we measure a company's size is with a term you'll hear all the time, market capitalization, or just market cap for short. And the math is actually super simple. You just multiply the total number of a company's shares by the current price of one share. And boom, that's the company's total market value. Now, companies get grouped into different categories based on that market cap. They go all the way from these tiny, kind of risky microcaps, all the way up to the massive ultra caps. We're talking about the household names you know and love, like an Apple or a Microsoft. A really great way to picture this is to think of them like trees. A giant, ancient redwood tree is super sturdy, right? It's safe in a storm. That's kind of like your large cap stock. But then you've got this little oak sapling. Sure, it's more vulnerable, but man, it has so much more room to grow. And that perfectly illustrates the trade-off you're always making between safety and growth potential. Okay, so we've got our compass. We're starting to understand the landscape. Now it's time to pack our bag with some really essential tools and strategies for the journey ahead. One of the most powerful tools you can have in your investing toolkit is something called an ETF, which stands for Exchange Traded Fund. The easiest way to think about it is like a basket that holds a whole bunch of different stocks all at once. It's a fantastic way to spread out your money or diversify and lower your risk without having to go out and buy dozens of individual companies yourself. But listen, no matter what tools you end up using, success really boils down to these 4 key things. First up, you have to understand your goals.
Why are you even investing? Are you saving for retirement that's like decades away? Then maybe you can take on more risk for more growth. Or are you saving for a down payment on a house in 5 years? That's a totally different, much safer approach. Second is timing. And no, this isn't about having a crystal ball. It's about understanding the current conditions, like learning to spot when a stock is overbought, meaning its price shot up way too fast and might be due for a fall, or when it's oversold, meaning it's been beaten down and could be a real bargain. Third, and this is a big one, do your homework on every single company. And finally, number 4, always keep one eye on the bigger economic picture. And look, your learning journey absolutely does not end here. This is just the beginning. As you get more experience under your belt, you can start to explore more advanced tools like factor investing, using stock screeners, and even leveraging AI to help you make even smarter decisions.
Remember that little oak sapling we talked about? Well, just like that tree, every single investor is going to face some storms. That's a guarantee. The key isn't trying to avoid them, because you can't. It's about being prepared for that inevitable economic weather when it comes your way.
And trust me, these storms can come from literally anywhere. We're talking about geopolitical crises, like the situations in Ukraine or the Middle East, the massive national debt. All sorts of economic dangers can have a real impact on your portfolio. Just being aware of that bigger picture is such a critical part of protecting the money you've invested.
But at the end of the day, after all the charts and all the analysis, it really all comes down to this one simple truth. Your single greatest asset in stock investing is your own knowledge, combined with just a little bit of common sense.
So, we've laid out the map for you, we've given you the compass, and packed your bag with some essential tools. The path through that financial vortex should be looking a lot clearer now. So the only question left to ask is, are you ready to take that first step?